Still on that data, agriculture, finance and trade are the three sectors that contributed positively to the latest economic growth figures. Economist at Momentum Investments, Sanisha Packirisamy, joins us now for more reaction. Good evening to you, Sanisha. Do you agree that this latest expansion still indicates weak economic growth in South Africa?
Thanks so much for having me, Dumasang. So I think, if we look at where growth levels are today, they are still only 2% above pre-pandemic levels. And if we had to look at the growth rate, taking a step back and looking at the growth rate on average for the last 5 years, we're sitting at about 0.4%. And an average that is, less than 0.5% of growth for SA is just not enough to make meaningful inroads into the high levels of unemployment that we have. And of course, the overarching theme of inequality and poverty that still devastates many South Africans today.
Absolutely. Based on that, though, Sanisha, what is the near-term outlook in 2025 for economic growth? Is GDP still expected to expand at these moderate levels?
We do think that we can get a bit of an uplift in GDP growth, slightly above 1.5% for GDP this year is our estimate. And I think quite a lot of that will be on the back of some improvement for the consumer. So we've seen that we've had a bit of the two-pot withdrawals, which has boosted consumption expenditure. That's also what buoyed your fourth quarter spending. And we saw clothing in particular, as well as recreational spend picking up in the fourth quarter. We think that those two-pot withdrawals, which have now accumulated to about 43 billion, will probably be less in 2025, but there will be some, boost to household consumption from that. The fact that inflation is likely to be under more control this year, and the fact that we could potentially still get one more interest rate cut in the cycle could then alleviate the pressure on your debt-laden consumers. So we think that household consumption expenditure could do a bit better. We also see some improvement in fixed investment. We've seen quite a nice pickup in business confidence on the back of more political stability, which has come about because of the formation of the Government of National Unity. We've also seen more in the way of renewable spend in the energy space. Now, if we look at, the load shedding that we've seen this year, even though it was a dampener, I would say, on consumer sentiment, it still pales in comparison to the levels of load shedding we saw in the last 2 years. And so this year, we think that the detraction from load shedding, from growth from load shedding, is expected to be a bit smaller than what we've seen in the past. And so all these factors do shape up for a slightly better growth here, despite the fact that we do have these global risks still looming over South Africa's head.
That's encouraging. And lastly, with the revised budget 2025 expected next week, what needs to happen from the side of National Treasury to address slow growth in the country?
We need to see, firm commitment from government to continue with their fiscal consolidation efforts. At the end of the day, if we can get our fiscal house in order and if we can continue on the path of structural reform measures that can boost our medium-term growth outlook, it does mean much better sovereign ratings for South Africa in the medium to longer run. And I think that we have seen some structural reform efforts, particularly in the energy space. And even with the recent bouts of load shedding that we have, I will make the statement that, energy security has been on a structural uptrend. We've seen some small improvements coming through on the railway system. We've seen government addressing issues on water supply and quality through the formation of certain water bills. And I think going forward with more structural reform efforts, even in the areas of local municipalities and digitizing parts of the economy, we should be able to see South Africa shifting to a higher growth level in the medium term. What government needs to do on their end is stick to expenditure restraint, and we need to see our debt to GDP stabilizing in the medium term to instill some confidence.
Thank you so much, as always, for your input. Sanisha Packirisamy is an economist with Momentum Investments, talking to us in reaction to the latest GDP data in the fourth quarter of 2024. Stats SA revealing earlier today that 0.6 expansion in South Africa's economic growth.